Compared to the more static charts, we prefer to look at rolling performance because this is how most investors experience their returns at various points in time. Over most 10-year rolling periods, private equity outperforms public markets. Yes, there are timeframes, 2010 and 2019, where public markets outperformed. However, those periods were brief, and it wouldn't surprise us if we were in the midst of one now. The 5-year rolling returns are much noisier and do have longer periods of private market underperformance. What's interesting, though, is that while we may see private markets underperform relative to a single public market index, we rarely see underperformance across all indices at the same time. Again, an important feature of private market investing is how much broader a set of companies and performance you're gaining in your portfolio. Turning to the periodic table, one of our most colorful charts and one where you rarely see negative performance. Some points to highlight. Venture. Dominated during the teens, lower performance since. This is somewhat expected given its cyclical nature. Growth equity. Real standout over the last 20 years. Consistent performance that's historically been toward the top in mature vintages. One of the steadiest strategies is U.S. large mega cap. Rarely a top or bottom performer, but tends to deliver reliable, strong returns. So what do the GPs think? Every year, we survey over 100 general partners across strategies and regions to get their market thoughts. Here we ask the GPs how they believe private market net returns will fare over the next 3 vintages. While often optimistic, the GPs are even more bullish this year than they were when surveyed the past 2 years. Interestingly, in 2022, 20% of the surveyed GPs believed the next 3 vintages would underperform public markets. And now in 2025, it might be worth asking, is that prediction or inside knowledge?